Good morning, guys. Cody back with another live stream. Today is August 23rd, 2021, Monday, and getting into some live charts right now. And afterwards, going to start on finishing up some backtesting from the third year of my backtesting project. 3 more years to go, 3, 4, and 5, and then I'm finished. So that's 3 more weeks. Okay. All right, let's look at the charts. So from the 3 pairs, or not the pairs, but the markup that I did this week, I actually picked I picked a few different pairs this week, right? Euro USD, dollar Swiss, and CAD JPY. Euro USD, I saw been waiting and sitting on this setup for a pullback to here. Now price gave an impulse, started to give a pullback. It didn't pull back all the way down to the level that I'm looking for it to pull back to, so it's not something that I'm really interested in taking in that scenario. Okay. Yeah. So in this scenario at 38.2, I would have loved price to retrace further down. It didn't, so no entry for me there. So still waiting on a better retracement, or just a better retracement here to happen on the 1 hour time frame, and then I'll be interested in actually taking a buy position here. So if a correction does come, I'm looking for it to be extended to form I wouldn't say like over a few days, but just a sizable correction for this impulsive move. And as price develops, be able to see that. Now, new zones, or my new first zone is going to be there. I should have another zone here that I could look for a buy at. Depending on when that correction starts, it's going to depend on which zone that I actually place. Or, gonna depend which zone I'm actually gonna be waiting for the entry at. Ideally, still in this situation, I'm looking for the 38.2. Yeah, let's just go with the first zone for now, and then we'll focus on if anything else happens. We'll change if anything else happens. So throughout this backtesting session is the first time I've actually noticed this. But in addition to initial reversals happening off 38.2, I've also noticed if it's not the 38.2, it may retrace all the way down to 78.6 or a deeper retracement level, which I never took into account before and never really noticed. I pretty much just took the 78 and the 88 off my list because they were losing the majority of the time that I was taking them. But if I focus solely on it in demand and supply zones, would that change the win rate of those trades? So that's interesting to me, and I'm probably gonna have to test that later. Give me 1 second. Because that's the idea that I was just holding in my head and I haven't written down. Okay, next pair, dollar Swiss. You know what? I was doing something. Okay, dollar Swiss. There we go. Let's go to the 4-hour dollar Swiss. Dollar Swiss, I'm looking at a triangle here, and for this triangle, I want to see price come down. I want to see this bearish flag play out. Come down to about this area. Price gets down to this area. I'm looking for a buy, and right around here, because I'm looking for dollar Swiss to push up. Obviously, the safety entry is to wait for the break of the triangle. In this situation, I'm buying this triangle. So, and for my continuation setup, this is the level that I would buy at. Off the break, I don't have breaks tested as much, and I personally don't like trading them, at least right now. It's something that I have as still to test and to add, but pretty much just sticking with my usual plan, which I need to do. For this position, if price gets down to this level, entry's right there, SL's going to be below that low. Take profit's going to be targeting this high pretty much, and then obviously taking partials in this area and at the first 2-to-1. So about a 7R there. Okay, CAD JPY. Now CAD JPY is a little bit different. Or a lot of bit different. So it's a setup based off the weekly time frame, if I remember correctly. Or do I remember incorrectly? No close below zone and strong bullish momentum candle at neckline. Looking for price to be bullish over a few days before push down an entry opportunity. Okay, if I said over a few days, yeah, it's a daily setup, so it was there. So looking for price to be bullish over the next few days, and then look for price to come back around, close below this level, and then give a selling opportunity here. And that's pretty much it for that. An opportunity, but it's not a full range of confirmation because this isn't corrective yet. Yeah, so I'm not even going to talk about that. I'm not even going to entertain the idea. Okay, these are the options for taking an entry above this level. If price forms an ascending channel on the 1-hour time frame, gives an impulse and correction, you can look for a sell and then look to target below this level. Other than that, just have to wait for price to break below this level and then look for sells. So, quick review. We're looking for a buying opportunity here. Have alert set, good. It's dollar Swiss, looking for buying opportunity here as well. Have alert set, good. Alternative impulse down correction. Ah, man. Now I have to remark this up. Yeah, I have to remark this up because I just saw something else here too. I don't like this setup anymore. It's not super clear. I do like that sell there. As far as like these lows, these highs, these higher lows, they're not good for me. For these, or not the higher lows, but this low here. What the? Come on, this high here. Jeez, it's not good for me. And also, we're scaling down to the bottom of this range here, so we should be looking for sells since this bottom of the range has not been visited yet. Yeah, there's just too many contradictions, at least for me and in my analysis, so I'm just confusing myself if I keep this on my list. So Euro USD, CAD JPY, Prime right now. I'm going to do a review of the other pairs that I marked up, which primarily the two that are going to be added are either going to be Euro JPY or dollar yen. And if there are no setups there, like I saw, like nothing setting up like for this week, then obviously not going to add it to the list. All right, gonna start on backtesting.
for information that might be subconscious, or questioning a particular way that, particular belief that you might have, so that you can, like I said, you can experience, if you've noticed that there are reoccurring dissatisfying experiences in your life. That's the thing that I'm talking about. You can assume that that isn't the only possibility that exists under those circumstances. Make that assumption. And then as a result of making that assumption, start asking sincere questions so that you can dismantle the closed loop. Okay. Okay, I thought you were referring to the trading things. That's why I kind of responded the way I did. Okay. About asking where the next best edge is.
No. I'll ask you later.
Okay. I do that all the time, by the way. I really do.
That's great.
Yeah, really. It's pretty cool the way it works.
It works for a lot of things. I've done it.
Yeah.
I've really done it from a brief standpoint, but in terms of like business and stuff, it's like, how can we grow this segment to the next level?
Sure.
If you ask yourself that enough times, eventually you can answer.
That's right. You really will. And where does the answer come from?
It pops out of your head.
That's right. Yeah, I don't know. It's like, where does it come from? It's just, it's just like it comes from wherever.
Your mind starts working on it because
Yeah.
You told it.
you put it to work.
Yeah, we
It's
do
supposed
have
to
the
not be-
we do have the capability of garnering information and insight from out there somewhere that isn't inside our memory bank.
All right. I'm gonna fix this video real quick.
Okay, not organized at the rational level of thinking.
Inspiration.
Yeah, exactly. But like I said, you have to ask a question from a sincere space. Yeah, the power of questions. It is really powerful.
They have to be worded properly. You can't land on failure.
Yeah, well, yeah, the wording has a lot to do with it. I mean, what he's saying here is that because I don't know if they picked it up on the mic, but he's saying, like, why am I a failure? You can ask a question like, why am I a failure? You really can. That's not a bad question to ask. However, but what you did say about properly wording the question, the wording has really everything to do with it. It really does. How you word your questions is virtually, well, I'd say, it's really important, I guess, because the answers you're going to get are going to be within the context of how you worded it. You're going to get something that pertains to the wording, as opposed to maybe something else that you might have wanted, but you didn't word it properly, based on what you wanted. Go ahead, Greg.
It's kind of like, if you want a better answer, ask a better question.
That's right. You're very good. That's okay. If that didn't get on the tape, Greg said, if you want a better answer, ask a better question, because you will get an answer that corresponds with the question you asked. What time is it? 2:45? Okay, as soon as we get done with this, we're going to listen to the tape. We're going to take a short break and listen to the tape. How do we do this? We'll start from, I'm on section 4, page 9, and Roman, why don't you start with the first point and read that, and we're going to go this way, like this. Just go ahead and read it.
Everything we have learned throughout our lives is structured energy.
Go ahead.
This structured energy will operate inside of our mental environment as a source of power, causing us to perceive and respond to the outside environment in a way that is consistent with this energy.
The environment can express itself in an infinite combination of ways. What each of us perceive and experience is very small in relationship with what is available in any given moment. In other words, instead of assuming that we already know, we can assume that we haven't learned to make every possible distinction that exists in each situation of our lives. Inherent within the distinctions we haven't learned to make yet is an opportunity to experience satisfaction.
Go ahead, John.
Fear causes us to narrow our focus of attention on the object of our fear, drastically reducing our perception of what is available or possible from the environment's perspective.
Many dysfunctional beliefs and fears operated under
subconscious level, locking us into cycles of dissatisfaction, frustration, and pain.
Learning something new is often blocked by the way the energy is already structured inside of us. In other words, once we learn a belief, it will forever shape our lives unless we unlearn it.
Or I should say, to draw the energy out of it.
Every advancement in human civilization, whether it be cultural, scientific, or otherwise, came from someone who challenged the status quo by questioning what he had learned. The act of questioning opens us up to perceive the existence of other possibilities. If we assume that happiness and satisfaction exist as a possibility, then it is up to each individual to find that happiness and satisfaction by discovering these possibilities. To discover anything new, you will have to be willing to question and look beyond what you've already learned to believe about what is true or available.
Now, the way that I like to illustrate that last point about the nature of questions is that if this circle, well, let's just say this circle, again, a very erroneous thing to do, but this circle represents the universe, meaning what's available to be learned in the way of distinctions about the inherent properties and characteristics of the whole universe, right? Okay? And you can say that, let's say 100 years ago, that the sum total of humanity, both alive at that time and recorded in some way up to that time, that was still in existence, might have made, in terms of knowledge or distinctions, this much in relationship to everything else that exists. And what's happened in the last 100 years is, let's say we've expanded that circle, let's say by something like that. How does the circle get expanded?
Questions.
Yeah. In other words, someone's willing to operate on the fringe. There's always somebody that's willing to operate out there on the fringe of what's possible. Go out, discover something, bring it back to the rest of us for us to say what?
Yes, sir.
Are you crazy?
Yeah, you're crazy. Not yes. Virtually always you're crazy. No, that's not possible. No, that's not real. No, that doesn't exist. And why? Because it's just the inherent way beliefs operate, right? It's conflicting information, contradicts what we already believe to be true. Not true. But it might intrigue someone enough, another person, to go out there and come back and say, hey, this guy's right. And then somebody else does, and somebody else does, and next thing you know, the circle gets expanded a little bit. All of us are in this circle. If you take the sum total of everything that's in everyone's mind alive today, everything that's in the mind of everyone alive today, plus what's been recorded from human history that exists, that by this circle, then each of us are a part of that make up the whole. Are some percentage of that circle. So how do we expand our own circle? The same way. Challenging what we believe to be true and questioning things and see what happens.
Challenge the status quo.
Yeah, challenge the status quo. It does seem as if that's what we're supposed to do. We are evolving into something. There isn't any question about the fact that humanity is evolving. If that weren't the case, then we would still be living like most of the people probably in Afghanistan. The sum total of humanity is evolving. There are definitely cultures that are not in the same, we're all not in the same spot, but we are definitely going somewhere. And it does seem as if there is a desire on the part of the universe as a whole to expand. Scientists already know that it's expanding. Now, if it's expanding at the macro level, wouldn't it make sense that because we exist at the micro level of an expanding universe, that if the universe as a whole is expanding, that if we're going to live within this universe in a way where we can create, let's say, happiness and satisfaction for ourselves, in other words, create a really satisfying life, wouldn't it make sense that we have to be in harmony with that expansion? Yeah, that the less that the more that we resist evolving, the more it seems that the universe kind of conspires against us. It's in conflict with us. And that would make sense because everything is in motion. Everything is constantly changing. Nothing is staying the same. No two moments could ever duplicate themselves, ever. And the only way that could happen is if every atom of every molecule was in the exact same spot it was in some previous moment. Now, from a practical perspective, I don't think that's possible. But the interesting part is every belief we've ever acquired can remain static exactly the way it was originally formulated for our whole lives. So we've got beliefs that remain static and a universe that's constantly expanding and changing. Beliefs that cause us to see the now moment as it exists in our lives instead of the way it really exists from the environment's perspective. And if we aren't willing to adapt our beliefs to correspond with this constant expansion, it will seem as if the environment is conspiring against us. And it will create stress. It will create anxiety. Because the stress and the anxiety is our own resistance to change. So let's take about a 15-minute break and we'll listen to the tape. From the Monroe Institute in Virginia, and they've been doing work in the area of how high-frequency sounds affect states of consciousness for probably over 40 years. They've got a real distinguished staff of doctors and PhDs, mostly from like Harvard and Yale and all your Eastern Ivy League colleges. And I started using their tapes many years ago, not only for myself, but to use in my workshops, because I wanted a technique that I could give people that they could use to help them neutralize their fears. There's, specifically those 4 trading fears on being wrong, losing money, missing out, and leaving money on the table. That was effective. What's that, Jake? What? I don't know, it's not on any page. That was effective, but at the same time met certain criteria. And the criteria was this. Instead of using hypnosis tapes or like specifically subliminal hypnosis tapes, one of the things that I found is that subliminal hypnosis tapes can be very effective, or even hypnosis tapes for that matter, can be very effective if what you're trying to do, in other words, whatever message that's on the tape, if the message itself is not in conflict with anything else that's in your mind, then the tapes can be quite effective. And so when you hear people talk about the power of self-hypnosis or hypnosis and how well it worked for them, chances are it was a circumstance in which whatever message they wanted to embed in their mind was not in conflict with anything else that was already in their mind. And so what you'd get is a glowing testimony or testimonial. However, when the message on a hypnosis tape is in conflict with something else that's in your mind, then what you're doing is setting up an inherent conflict, because what the tapes generally don't do, or don't, I've never seen them do, is help you neutralize whatever conflicting beliefs that you might have with the new message or the new way in which you want to express yourself. So in other words, this process of change is always a two-pronged process in many cases. One, de-energizing the beliefs that let's say you've determined are dysfunctional or are not useful any longer, and at the same time energizing and installing a new belief that compels you to express yourself in a way that's consistent with your desires or goals. So you've got to do both. So the reason why I picked these tapes is because instead of being passive, meaning that instead of you just listening to a tape, this particular technique requires you to be active, meaning that what this tape does is it uses high frequency sounds to install what would, I guess, be commonly referred to as like an anchor inside your mind. An anchor would be considered a tool. And as a tool, like any tool, a tool that might be in your toolbox is completely useless until you pick it up and use it. In other words, it has no use until, or function until you actually pick it up and use it. And it's the same way with the tool that's going to be installed in your mind from this tape. It has to be used, or otherwise it does nothing. So basically what's going to happen is this. I picked a tape, and there are a whole range of tapes that you can get from the Neuro Institute that have different purposes on this, in this HemiSync, in the HemiSync category. There are a number of different programs they have and a number of different types of tapes. But if you've looked at the catalog itself, has everybody looked at it? Just take a moment to look at the catalog and see the different uses they've designed these tapes for. The one that I picked was the, boy, that's slipping where my brain is. What's that? The, what tape did I pick? What? No, that's the name, yeah, DHAB, yeah, I'm sorry, okay. DHAB. You'll notice, what does it say about the DHAB tape? To neutralize habitual behaviors? Go ahead.
Eliminate or diminish undesirable mental, emotional, or physical habits. Use anytime you're about to follow a behavior pattern you wish to change. Break free of anger or old emotional patterns. Eliminate thoughts of failure and move beyond a cycle of negativity.
Okay.
See John Daggett.
So what I've done is basically adapt this technology specifically for the purpose of helping people who come to this workshop neutralize their fear of being wrong, missing out, leaving money on the table, and being wrong. And we'll get into the actual techniques later on. In other words, the techniques of using, how we're going to use the tape, we're going to get into. Maybe not today, if not this afternoon, by the time you're done, tomorrow morning. However, the reason why we're listening to it today is because it requires 3 listenings, meaning that we're going to listen to it once right now. You're going to listen to the prep side of the tape. The prep side of the tape is just getting your mind prepared to get this function command installed when you listen to the other side of the tape, the DHAB side of the tape. You've got to listen to the prep side of the tape twice. We're going to listen to it now. I'm going to ask you to rewind it and listen to it again tonight. And then tomorrow we'll listen to the DHAB side. Now, all this tape is basically high frequency sounds, and you'll hear, I don't know if it's Bob Monroe any longer or a guy by the name of Mark, I don't remember his last name. But anyway, Bob Monroe's now dead, but he used to be the voice on the tape, and you won't hear him very much anyway. But there's a couple of things. One, the tapes are incredibly relaxing. I haven't had anybody yet that's come to one of these workshops that really hasn't enjoyed the experience of listening to the tape. Now, you can listen to this tape as much as you want. You can't listen to it while you're driving or anything else like that, because you'll probably end up falling asleep. You don't have to fall asleep. When Bob Monroe or whoever's talking on this particular version of the tape says, you know, for your hands and arms and legs to go to sleep, he's not telling you to go to sleep. He's telling those particular parts of your body to go to sleep. If you end up falling asleep, that's all right. It's no big deal. He'll wake you up at the end of the tape. And again, you can listen to this tape as much as you want. If you like it and you want to use it as a relaxation tape, listen to it all you want. This tape will do nothing to get rid of your fears by itself. Listening to the tape has no effect on your fears. Only consciously using the function command when it gets installed in your mind on the other side of the tape, when you consciously take the steps of using the function command, will it have any impact on your fears. Are you guys with me on this? I know maybe it can sound confusing. Sean?
On the second side.
The tool's on the second side. Well, okay. What I'm saying is that listening to the tape in and of itself doesn't have any effect on whatever fears you might be wanting to neutralize. Although you can listen to the tape as much as you want. Bob Monroe doesn't know what your fears are. Bob Monroe, when they designed the tape, does not know what habitual behavior you want to neutralize. That's up to you to decide what habitual behavior you want to utilize by taking the tool out of the toolbox and using it in the appropriate moment, meaning that it requires a conscious decision on your part. That's why I picked this technology. It's not passive, it's active. You don't take a part in it, nothing happens. Are you guys with me on this? John, are you with me? All right. Okay, now, so put the tape in the machine. The prep side of the tape. Turn Dolby off if you've got it. If you've got an expensive machine and have Dolby sound reduction, turn Dolby off. When everyone gets their headphones on, I'm going to tell you when to turn it on, and everyone turn it on at the same time so we're finishing at the same time. It'll last approximately 28 or 29 minutes. Sit back in your chair and relax and enjoy the experience. Don't turn it on yet. Wait till everyone's ready. And we might want to, I don't know if we want to turn those lights down, or can we do that?
Anybody bring any incense?
Yeah.
Sage.
Is everyone ready? Everyone ready to start? Yes? Okay, turn it on. Let's go. Where it worked. Anybody sleeping? Where? Who fell asleep? What? What?
Heard some snoring.
Yeah, did you? Anybody got any feedback on the tapes? Was it generally a pleasant experience for everyone? Yeah. Your hand is numb? Yeah, these are really nice tapes in terms of, I mean, not only are they effective if you use them for the purpose for which they were intended, but you can also use them as just a general relaxation tape. As a matter of fact, how are you guys doing anyway? Does everyone want to go for another, let's say, half an hour, 45 minutes, or? Okay, good. Okay.
Oh, he said we're wide awake now.
Yeah, right. Yeah, great. Okay, good.
Thanks.
What's that? What was that, John? I didn't hear that.
Ten.
That's the wake up.
Every time you say 11, we have to send more money in.
Okay, I'm in section 5, but I'm going to go right to page. I'm going to go right to page 4. No, right to page 3.
Page 3, the beginning of the book?
No, page 3 in section 5. Right at the bottom of the page, it says using the Monroe tapes to neutralize your trading fears. Since we've just done this, you just listen to the tape. I'll go right into how this works. The way you're going to do this is when you, well, you see, you haven't got the function command yet. Maybe we ought to do this tomorrow. No, I take that back. We'll do it tomorrow. I'm sorry.
Go to section 6.
Yeah, really. Problem is, I don't feel like getting into this right now. Hold on. What? No, hold on. That's all right. Hold on. Let me.
I'll make some comments about the self-hypnosis tapes.
Yeah, go ahead.
I've done a lot of work in that area.
You have?
Yeah.
Okay, cool. Go ahead. Take you to notice that you weren't following your normal routine. How many days, weeks, or months?
I don't know. It's been a year. It's been a process. You know, where it's been a challenge to make any money. It's not the market. It's in me.
Okay, so what we're going to learn, there's a particular, just a real simple meditation technique that we're going to do tomorrow. That will, if you practice this around 10 or 15 minutes a day, what it'll do is it'll help you become an objective observer to your own stream of thoughts, so that you can start to notice when you're not doing, or when you're not thinking, or when you're thinking, saying, or doing something that's inconsistent with your goal, so that you're not unconscious of this moment-to-moment endeavor for of how we're creating our lives and the choices that we're making. Because you know, if you want to be a consistently successful trader, then you know what you want to do is collapse the amount of time that it takes for you to notice that you're not doing something that's consistent with your objective of becoming consistent. And hopefully by doing this kind of exercise we're going to do tomorrow, what it'll do is it'll collapse the amount of time that it takes for you to notice that to virtually instantaneous. That you're aware that let's say your distracting thought, because anything that you do that deviates from what your objective is a distraction, right? Well, doing is the last step. The first step is always a thought. You're going to think about it before you do it. You might even run something through your mind. You might even talk about it with somebody. But it's first going to be triggered by a distracting thought. Now, if you really want to become consistent, what you want to do is be able to catch yourself in the thought. Catch yourself at the point where the thought and the awareness of the distracting thought are virtually simultaneous. Instead of it taking, 5 minutes or 10 minutes or, looking back days, weeks, or months later, saying, hey, you know what? I'm not doing what I know works. That's basically even what you were saying. You're not doing what you know works.
Yeah. I'd add one other thing, because you mentioned it yesterday. And I don't remember in what context. I used to keep track of every day before I started trading. I'd write down a number from 1 to 10 or 1 to 100. And it was rate yourself on how you feel that day.
Right.
And if you feel like you're an 8 or a 9 or an 85 or a 95, and if a trade comes along, have the courage when you're at the higher end of the scale to put it on and go for it. Don't hesitate as much. And if you're if you feel like maybe you're a 3 or a 4, put the trade on, but don't don't go balls out on it.
Or scale back.
Yeah, or scale
in other
back.
words, it's a rating system to use money. You can use in conjunction with money management, so that if you, let's say, you normally might trade 3,000 shares, if you rate yourself a 10, then you're going to trade 3,000 or maybe even a little bit more if you get a real primo signal.
Yeah.
But if you're rating yourself as a 5 that day, then you know what? You want to scale back proportionally. You might only trade 1,500. You might only trade 1,000.
Yeah.
Because what it really gets down to is like at least what I had before, is that if you're not in the most ideal, if this is positive and this is negative, okay, and you're not in this most ideal state of mind to be trading, because that's what it really boils down to, and that's really essentially what you were talking about. He was rating, he learned, or at least he involved himself in a system where he was basically gauging or rating his state of mind. In essence, his capacity to make money, or his capacity to make money in the sense of how clearly am I going to be able to perceive the market and how well am I going to execute my trades. And in advance, he's saying, you know what, I'm a 6 today. And you can learn to do this, and you can learn to be honest with yourself about it. And as a result, have your money management, in other words, the amount of size that you put on, correspond with how you're rating yourself.
Yeah.
In that scenario, would you also take a moment, say 45 minutes or an hour into the market, to rate what the market's doing to make sure that you're in conjunction?
Oh, you could, sure. Yeah, you could let the market define itself. And not trade the open,
Well,
let it go.
if you're a 9 and the market's a 2.
And the market's a what?
2.
Oh, I don't know what you mean then. I misunderstood. You mean in terms of symmetry? In other words, if you're going to rate the market in terms of symmetry? Is that what you're saying?
If you're trying to determine what your strength is as of that morning, in either mental clarity, physical clarity, whatever it is, on a scale of 1 to 10,
Right.
wouldn't it also make sense at some point after you've seen the way, not trading the open or not trading, just somewhere in that first hour, determine what your opinion of the market is that day on a scale of 1 to 10 to make sure they're in sync? Because if you're trading at a 9 but the market's reacting at a 2.
Not really. I'm not really. Yeah.
How are you trading the market?
Sometimes maybe you can put into perspective. Sometimes I have a very strong, I feel that I know what the market is doing for. I feel confident about that. Maybe that's
Is that what you're saying?
Today.
Is that you felt confident about how the market's unfolding, and yet the market isn't unfolding that way? Is that what you're saying, or? Because look at it this way, John. Even if, whatever assessment that you might have about the way the market's going to unfold, okay? Whatever assessment you might have about that, or what the potential is, even if the market isn't doing what you thought, isn't that significant? So when you look at it that way, it's like,
And you'd see it sooner if you were trading at an 8-9 as compared to if you were.
exactly, okay?
It's all
So,
into it.
yeah, so it's like you could say, hey, what's significant? Is the market following, the projected symmetry? And if it is, that's great, but if it isn't, that's telling you something too, isn't it?
Right.
And you're also gonna get signals, you can also get a lot of signals out of that. You get sometimes more signals about what it's not doing in relationship to these significant reference points of symmetry as opposed to what it is doing.
What would agree that we don't know what the market's going to do anyway.
What's that?
we
We don't
agree?
have to know. Well, but we're kind of mixing. We're kind of mixing it. We might, mixing a little bit in the sense that it depends on the context in which we're trading. If we're trading mechanically, all this kind of discussion would be irrelevant. If we're trading subjectively, it's not. It's just like, for an example, if you're trading mechanically, you're going to have a predefined, a definite predefined entry point where the variables are specific. There's no subjectivity whatsoever in terms of, the conditions under which you enter the market. Those variables are either present or they're not. It's black or white. They are present or they are not present. If they are present, you're obligated and committed to enter into a trade. If they aren't present, then you do nothing. But when you evolve into the subjective stage of trading, then you can use anything you've ever learned about the nature of the market to generate a signal to get in or out. So for an example, what we're talking about, Roman, is that in the mechanical stage of trading, let's say for an example, the market's doing this and you've got a stop down here. You entered the market long right here at this point, okay? At this point right here, and your stop is down here. If you're trading mechanically, you can't do anything with that stop, meaning that the market, your market either goes in your favor, stops you out, and that's all there is to it. Either or. If you're trading subjectively, if the market, let's make it a little bit easier to illustrate if I made more distance, but if you're trading subjectively, if the market's trading around in this area, and as a result of the kind of patterns that it might be producing, you could say, you know what, I don't need to keep that stop in the market. I'm going to pull it and either move it up, move it further down, based on your assessment of what's happening now. See, in the subjective stage of trading, you can do that. You can even get out before you get stopped out, even if it wouldn't have stopped you out otherwise. In a subjective stage of trading, if you make that assessment of what the market's telling you in that moment, that's all right. Did you see the difference?
I can see the difference.
In the subjective stage of trading, you can do anything you want under any conditions that you want. If you put a stop in the market, you want to take the stop out, then take it out. You want to move it, then move it. In the mechanical stage of trading, there's no discretion whatsoever.
It starts to change the rules.
What's that?
Are you then changing the rules?
Yeah, you can't-
Going from mechanical to subjective.
Yeah, in other words, you're either one stage or the other. If you're trading a mechanical stage, you can't change your rules in the middle of a sample size. You can only change your rules after the end of a sample size. So whatever you determine your sample size of trades to be, whether it's going to be like 20 trades or 25 trades, you are committed to take all 20 trades. You can't change anything in the middle or until you're done. But when you've moved into the subjective stage of trading, I'm assuming that you won't do so until you have worked through whatever resistance you may have to thinking in probabilities. When you've worked through all that resistance and you're confident that you've learned to think in probabilities, then there's no reason why you have to continue to trade mechanically unless you want to, or unless you know that you have, let's say, a plethora of self-sabotaging beliefs that you don't want to get into, you don't really want to do anything about. Then what you do is you stay in the mechanical stage so that you can make a clear distinction between what you need to do based on your methodology and what your mind may be telling you to do based on the fact that you've accumulated too much money and you might start sabotaging yourself. Because at least in the mechanical stage of trading, you can make a clear distinction between what you need to do in any given moment and what you can't do. Whereas in the subjective stage of trading, that line is really blurred. And it is very easy for self-sabotaging beliefs to enter into the equation. Okay, you get the difference? So other than that, if you guys have any questions, because I'm not going to. I just don't want to do it. I'd rather do it tomorrow morning. What? Well, what stories you want? What do you know?
Trading.
Well, what, you know.
What was your best day?
Well, there's probably one of the most interesting traders that I ever worked with was in the bond pit, and I worked with him for quite a while, and I'll give you something. I'll give you an example of when I said that it's your state of mind that'll determine your results as opposed to the amount of time that you expose yourself to the market or the opportunities. You could say that, I mean, this guy, he loved to trade, and he was back in the early 90s, one of the biggest traders in the bond pit. I don't know if you know his name or not if I said it, but he wasn't as big as Baldwin. But there would be times, his largest position he'd put on would be about 5,000 contracts, futures contracts. But his normal position was between 300 and 500 contracts. So one contract in Treasury bond futures, a one tick move, the smallest incremental move in Treasury bond futures is worth $31.25. So 100 contracts would be $3,125 or $33,125, and 500 contracts would be over $15,000. So his normal, let's say if you put on 500 contracts, his normal position between 300 and 500, one incremental change in price was worth about 15 grand in or out of his account. And you know, the bonds, especially back then, they could easily move 10 ticks in a matter of seconds. So you're talking $150,000. And you could easily be subjected to 8 to 10 tick price vacuums, either for or against you. So you're talking $150,000 in a matter of moments. And like I said, there were times where he'd put on thousands of contracts, not just hundreds. So, you know.
Was he a scale trader?
Scale trader?
Did he scale into his positions, his differentiation from scaling out?
Well, sometimes he'd take on the whole pit practically. Okay. And it was, I had many other clients in the bond pit who watched him and said that there were times it would be like watching Michael Jordan trade bonds. He was good. He was really good. And it was also that he just loved what he was doing. He loved being there every moment. It was hard for him to leave. And he really didn't give a shit about the money. And the money was truly irrelevant to him. In fact, out of all the people I've ever worked with in my life, I've never met anybody who was on the extreme, I mean, way over here in terms of how little money meant. Just didn't matter. But he had other problems. When I met him, it was in May of 1992. He had a real bad day. Someone he ran into had come to one of my workshops and said that he should call me. He did. We had an appointment. Didn't really. In fact, we had a couple of appointments, and not really much happened. He just, you know, I tried to explain some of this material to him, and he wasn't really into it or even grasping it for that matter. So I didn't hear from him for another couple of months, and I actually didn't hear from him at all. I heard from his wife, who called me. I never even met her, and she called me, and she was hysterical because he was gonna have to mortgage the house because of a bad day that he had. And when I met him in May of that year, 1992, he had approximately $10 million flow in and out of his account from January until May. That's the kind of swings that he was on, okay? $10 million in and out like this, okay? The most he'd ever accumulated at the end of any given year was about $600,000. That's the most he's ever been able to keep up to that point anyway. So she was really hysterical and wanted to know what I was gonna do to, you know, fix her husband. And I wasn't even really working with him. And so we started working together on a real consistent basis, virtually every day. And that was in July of '92. And so from July of '92 until the end of December, he had $5.5 million. And then he went on vacation with his wife, and on vacation bought this book called The Coming Collapse of either the Bond Market or the Interest Rate Market, and bought into the concepts in the book. And from when he got back off from vacation that year, bond market was in one of the biggest rallies that it ever sustained of all time, and every day he was going in thinking the market was going to collapse based on what he read in this book. That wasn't an accident, by the way, in terms of everything else that was going on in his life. And by the middle of March of 1993, he was so desperate over the fact that he'd lost just about half of the $5.5 million. He was down to about 2.2 million. And I was telling him virtually every day, because we were talking almost every day, sometimes for an hour a day. You know, this is the way you need to think. This is what you need to do. This is how you fix the situation. He just wasn't listening until one day he called up and he said, "Okay, I'll do anything." And he meant it. I'll do anything. And so, and I said, "Here's what you've got to do. I've noticed that you're capable of staying properly focused about a half an hour a day. That's it. And so if you want to fix the problem, you only get to trade a half an hour a day."
What was his first response?
Well, that was really tough because he just loved doing it. And it wasn't just a matter of him loving to be in that pit because of the way of life that it provided him. It was like there's a work ethic in the futures pits. There really is. I mean, it's like where you stand in that pit is very important. There are territorial constraints and territorial, let's say, dynamics involved, because if you're not in your spot and you're not in your spot all day long, it means someone else is going to take that spot. And these guys do get into territorial wars all the time. I mean, I've worked with traders who get into these territory wars about where they want to stand, and each one of them gets there, like 10 minutes earlier every day until they're like getting there 3 or 3:30 in the morning, until one of them eventually gives up. And they go through this a lot. I mean, this is not uncommon at all. They're basically got this range war going for this one little square foot of where to stand. So there wasn't just that. It was also the work ethic. In other words, when you trade, when you have access to order flow, in other words, the kind of order flow that's coming from off the floor, a lot of that order flow is not really trading. It's virtually free money. Do you know what I mean by free money? It's riskless. That's really what most of the locals in the pit are looking for. They're looking for the riskless. If you're standing next to a floor broker that has access to order flow of both buys and sells, and there are market orders coming into the pit, and there's a spread of 1 to 2 ticks between the bids and the offers. Well, if I've got an order to buy 100 contracts at the market, and the bid is 08 and the offer is 10, well, I'm going to be selling them. I'm going to be selling them or buying them at the bid and selling them at the offer to my buddy standing next to me. Now that's a 2-tick spread on 100 contracts. You just made 200 ticks. Was there any risk? Because he's going to take the other side of both orders. All you got to do is cart it up. His buddy's okay. Cart it up 100. Okay, you bought 100 at 8. You sold them at 10. Where's the risk? See, that's not trading. That's just basically free money. Now, you got to pay a price to get into those situations. It's not as easy as you think, because the guys that are controlling that kind of order flow, they expect favors in return. It's just not that simple. But well, you name it. You name it. It's an extreme environment. You name it. Anything your imagination can think of was about what it entails. But anyway, but it's not just that. It's not that. And I'm not saying even implying that he had access to a lot of those trades. He really didn't even need that because he was really just a good trader in terms of his ability to be able to perceive, where the direction of the market was and what he needed to do.
Was there a particular time that he traded?
Oh, I'm going to get into that. Okay, and that's really part of the whole story. As a matter of fact, it's an important part of it. In that, like I said, he loved being down there. He loved doing what he was doing, but at the same time, his ability to remain properly focused was about a half an hour at the very outside. The rest of the day, he was just all over the place. So, and you got to keep in mind one thing: when you're trading at a level where each tick might be worth $15,000 or more, it doesn't take much to screw up. Now you're standing in a pit. You've got literally, I don't know how many guys can stand in the bond pit, over 1,000, I think. And they're all screaming. They're all in close proximity to one another. They're jostling with themselves. They're screaming in your ears. You're getting pencils poked in your body, your face, or whatever. There's all kinds of bodily smells going on. There are guys who do not want you to make money, okay, and will purposefully distract you. There's a lot of things that the order fillers do to suck people into a trade, big locals, to take the other side of a trade where they know for a fact that that someone's going to hit the market with a huge bid or offer they're sucking you basically what they virtually know is a losing trade. So, and not only that, it's like if you're in one of these trades and there are bids and offers that you're leaning against to get in or out of a position, and let's say you're in a position and there are bids and offers available that you can hit to, let's say, get out of a trade, out of a 500 lot trade at a 2 or 3 tick profit, and then all of a sudden, just someone says, hey, and you turn your head and those bids or offers disappear. And next thing you know, there might be 2 or 3 ticks lower. Now you're looking at a scratch where you had like on a 500 lot trade, you had 1,500 ticks available to you. Now you've got 0. You're going to scratch a trade, or you're going to think you're going to get your 3 ticks back, okay? Or now it's 1 tick against you. Now you got 500 ticks against. Now you're a 500 tick loss, 1,000 tick loss, 1,500 tick loss. Yeah, okay. What are you going to do? What are you going to do? And you're thinking about, if I just hit that damn bid for the 3 tick profit. Okay, all it takes is just this momentary, that's all it takes. And so his ability to stay completely focused in what he needed to do and when he needed to do it, like I said, was about a half an hour a day. And so that's what I said. You want to stop this, then just trade a half an hour a day and find something else to do with the rest of your day. And he was so desperate that he did it. No, wait a minute. Go ahead.
Most people to stay at that level, it's just your body's working on it's such extreme sense of awareness that it is hard for a lot of people to focus.
Oh, absolutely.
Longer than that.
Oh, absolutely. It would be the equivalent. The kind of stuff that he did was equivalent to if you can imagine being in the 7th game of an NBA playoff. Okay, the score is tied and there's 1 minute left.
Right.
Okay, you're talking intense.
Every day.
Yeah, this is every day, right? This is every day, all day long. Intense. So, and in trading in the zone, there's an analogy that I use where it's like someone building a bridge over the Grand Canyon. Okay, like when you're trading just one futures contract, you build a bridge over the Grand Canyon. It's like, okay, the bridge is, the bridge could be as wide as this room. What's the possibility? What are the possibilities I'm going to walk over this bridge and I'm going to fall off? Even if I'm staggering, okay? It's like I got a lot of room, big margin for error, right? Now I could fall off and, next stop is a mile down. But as you start trading in higher volume, meaning that as your contract size grows, that bridge, the equivalent of that bridge, basically narrows. Narrows to the point where you're trading 500, 1,000, 2,000 contracts. You're basically on a tightrope. Okay, now you're on a tightrope over Grand Canyon. And what does it take to knock you off? Well, if you're on the tightrope over Grand Canyon, it could take just not even a very hard breeze, but a relatively gentle breeze might cause you to lose your balance and fall off. That gentle breeze in the pit is the equivalent of one distracting thought. That's it, just one distracting thought. He went ahead and did this. And he said, well, what half an hour of the day should I trade? And I said, you'll find it won't make any difference. Pick any half an hour that you want. Because regardless of what half an hour it is, regardless of how much volume is available in that half an hour that you pick, whether it's a lot or whether it's a little, based on your ability to trade and the fact that you're trading, that you know that you only get a half an hour to do this, and you have the skills to do it, and the fact that you have maximum focus going into it, you will extract the maximum amount, whatever it is, in that half an hour. So it won't make a difference. It just won't. He didn't believe that. He really didn't. He found out that it was true. It did not make a difference. He averaged, while he did this, he averaged $180,000 a day, almost every day, for just a half an hour. Changed the whole character of the bond pit. The whole character of the bond pit, because all these other people in the bond pit who are there grinding it out all day long are watching him stroll in, stay a half an hour, and walk out with a whole boatload of money, and they're thinking, hey, what am I doing? Now go ahead and ask your question.
How did he maintain his position? Meaning his 1 square foot.
It really wasn't a problem. Just the fact that he was a half an hour. They just yeah, he was such because of his stature. They stepped aside.
It's a pecking order now.
Yeah, it's a pecking order, right?
Was he able to keep his profits after a while?
Well, he ended up in a really one of the bitterest divorce proceedings you could imagine, and his wife actually got him enjoined from even going into the pit. He couldn't even trade for almost 2.5 years.
Wow. Oh, because she didn't want him to lose the money.
That's right. Well, they spent it all on attorneys anyway, so it didn't make any difference.
I've seen a guy, his wife used to come up at 9:15 in the morning, and they were going through they had problems, and eventually got to work. Just rag and rag and rag. The guy just kept
Nice way to start the day.
And it had an effect. Call me now.
Nothing constricts what we can think about. Nothing. Only one thing. Let's put it this way. Nothing can limit what we can think about except for one thing. And what is that?
Beliefs.
What?
Beliefs.
Nope.
Fear.
Fear, which would mean which would mean what? What are the implications of lack of fear? Or what are the implications of a fear of thinking in a certain direction?
Because you limit yourself to things, you're not open to all the data that's available to you.
Okay, well, I was just thinking just a lack of willingness. That's the only thing. No desire.
Lack of desire.
Yeah. Because that's really what it takes. That's what all of this takes. It all boils down to, what do you want? What are you willing to focus your energy on with conviction? Because regardless of what technique you're comfortable with, if you choose to go through a process of transformation, it really doesn't matter what technique you use. I shouldn't say it doesn't matter. I mean, it can matter if you're using it inappropriately and you don't know what you're doing. But technique is not as critical as desire. So there's really only one thing that stops anybody from thinking outside of what they've learned to believe, and that's a lack of willingness. Correspondingly, all it takes to tap into creative or inspirational information is a willingness, desire. If the desire is genuine, you'll get the information. That's an absolute fact. It really is. And I know maybe for some people who might not have experienced this or experience it on a regular basis, That's all it really takes, is a genuine, sincere desire. And if you try it and you don't get the information or don't get any information, then I would say that your desire was not genuine and sincere. It's what would commonly be referred to as lip service. You're saying the right words, but you know, the sincere energy isn't behind the words. And that's really what it takes.
Along that same line though, if you've never had change in your life to where you can see an A-B situation, to actually put yourself to think that it could change is a huge gap.
It really is, yes.
But once you find someone that actually gets that A-B and can say, I was a different person yesterday, I had a different thought process yesterday, if that accelerates, you're going to have just a dynamic curve straight up.
Oh, yeah.
In fact, it's just that first huge step that makes all the other steps fall along the way.
Right. Yeah, good point, John. I would say those kind of changes, those kind of first step changes for me came in years. Years.
Yeah.
But you know, that was a long time ago, and didn't have access to the kind of insight and material that's available today too. Or let's say it was available but not readily accessible like today. Put it that way. Things have changed a lot in the last 20 and 30 years. They really have. I mean, when I was writing The Disciplined Trader back in, starting in 1982, and you know, in dissecting the dynamics of beliefs and belief systems and things like that, I mean, I thought I was really way out there and really afraid to even share the material with people because I thought they'd think I was crazy. Really, I'm serious. Especially the trading community.
I see that all the time. Not all the time as much, but there's a certain degree of people I've come across over the years as traders who kind of think that this aspect of learning about yourself and thinking that that's going to help you as a trader is a little bit unmanly, I think, is the way that most people think about it.
Sure. And not as much now as what it used to be.
Right.
I mean, but certainly back in, when I was working predominantly with floor traders in Chicago, back in the 80s, I mean, I would say the vast majority of floor traders looked at Mark Douglas like, whoa, get away. I've spoken at conferences. There was the first conference I actually spoke at. Tim Slater invited me to speak at CompuTrack in April 1983 or 1984. I don't remember. And down in New Orleans, and it was kind of amazing how the chain of events occurred to even me getting that invitation in the first place, because it was just really bizarre circumstances. Or synchronicities that were really that were kind of mind-boggling to me. But anyway, I was invited to go down there to speak, and one of the and at the time, I mean, I had no credentials at all. I had nothing. I really did. I had absolutely no credentials to be doing what I was doing. But Tim, and it was all really just based on a conversation that Tim and I had at dinner. And I just happened to sit down next to him because some woman broke a date with me, and or I wouldn't have even been at that particular banquet. And she broke this date. I was waiting for her, and I happened to sit down next to Tim Slater. Didn't even know who he was, and we talked. And then I found out later on that he did these conferences. Unique. That is the truth. Our minds make it seem as if this moment can be identical to something I've already experienced. Sometimes there'll be a correspondence, okay? There will be enough of a correspondence that we'll experience some degree of satisfaction based on what decision we make, because our minds associated this now moment, this unique moment, with some memory that we have. But as traders, there's too much of a capability. I mean, there's too much of a potential, let's say, to make catastrophic errors by allowing this mechanism to cause us to think that we know what's going to happen next. See, so what we want to do is take that gap away between the reality of each moment being unique and what our memories say, and say, you know what? I need to install a mechanism in my mind that will not let me think that this moment is anything other than unique. That's what we're doing. I need to install a mechanism in my mind that will not allow me to believe or think that this moment is anything other than unique. That way my mind is now open to receive anything that may be of relevance in terms of what could satisfy my desires or goals. So that I can make a decision based on all the information that's available, not just what might satisfy my expectations. And remember, my expectations are going to be what? Based on what? What are my expectations always based on? Well, beliefs, yeah. Because an expectation is a belief projected out into some future moment. So that's exactly what we don't want as traders. We do not want to be basing our decisions on our expectations, because when our expectations are fulfilled, we feel satisfied and happy. And that's something that we all desire. And when our expectations go unfulfilled, we experience emotional pain. This is a universal characteristic of humans. Probably of anything that's alive and can think. I mean, we've got cats, and when they don't get to go out, they're in emotional pain. So what we don't want is, we don't want to be perceiving information based on this limited kind of this limited filter, so that only the information that makes me happy gets filtered into my mind or gets allowed in, and all the information that has potential to make me feel anything other than happy gets filtered out in some way, either completely ignored or altered or distorted in some way. So we need that mechanism. So this is what I was saying before. What I was saying before is that we're going to use our trading. We're going to use the actual, let's say, process of trading to create these mental mechanisms that will cause us to think that, no, this moment is really unique. And that doesn't mean you can't feel or sense or know what's going to happen next, because you can. But it'll be from a different context. It won't be from a rationally based context. It'll be from an intuitively based context. These are worlds apart. Because if it's genuine intuition, it seems like as if I'm going to maybe contradict many of the things that I've said earlier, but if it's genuine intuition, you'll always be right. Because in essence, you're in the zone. That is, that you spontaneously tapped into that framework where you are in complete harmony with, say, with the market consciousness, that collective consciousness of everyone who's participating, and you are in the zone. So it's not a rationally based knowing, it's an intuitive based knowing. But it's our rational mind that'll always, one, keep us from getting into it. Because if I think I know what's happened, if I think I know or believe what's happening at a rational level, it means that my knowing is coming only from my past. Are you guys with me on this? The knowing is coming only from my past. My past happened, if I think I know or believe, based knowing. The market consciousness, that collective consciousness of everyone who's participating, and you are in the zone. So it's not a rationally based knowing, it's an intuitive based knowing. But it's our rational mind that'll always, one, keep it, because if I think I know what's happened, if I think I know or believe what's happening at a rational level, it means that my knowing is coming only from my past. Are you guys with me on this? The knowing is coming only from my past. My past cannot. What's that? Well, you can predict the future. You can. Yeah, anybody can guess the future, and that's not. I'm not saying you can't predict the future, but let's put it this way: my past, based on what's already in my mind, can't know a truly unique moment, because a truly unique moment is something that never existed. My past can only know it afterwards, or my rational mind can only know it after the fact.
So how do you reconcile that with intuition? So if your intuition is saying go, 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 and
Your intuition won't say go, 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 go. Intuition doesn't work like that. Intuition isn't compelling in any way. Your rational mind is compelling. You feel compelled to do anything, it's coming from your rational mind. Your intuition is just spontaneous. You just find yourself doing things. Your rational mind is the one that's going to pull you out of doing it.
so how do you?
It's like it's doing something without weighing and judging. You see, your rational mind weighs and judges everything based on your past. When you're in that kind of a zone and acting spontaneously and intuitively, you won't be weighing or judging anything. In essence, you'll just be finding yourself doing something. It's like your rational mind will wake up and say, hey, what am I doing?
Mark, it's kind of abstract. Can you just show me? Can you show me a trade that's rationally based versus?
It would, John. It wouldn't make any difference.
Okay.
You see, in terms of showing you a trade, I mean, I could pull up a whole bunch of charts.
I'm
And
just thinking. Tell me a trade that's rationally based, versus. An example.
any trade that you think, any trade that's based on a pattern that you know at a rational level would be a rationally based trade. Meaning anything you've already learned about, and it's in your mind as a memory. Whereas something, have you ever had kind of a gut feeling about something, but didn't really have a way to judge it from a rational perspective? That's what I'm talking about. I'll give you an example. I don't even know if I have that chart with me, but there was a chart I was doing a typical pattern I'm going to show you guys later, an ABCD pattern where AB equals CD. It'd be something like. This would be like a 618 retracement, and like this. And these two lines right here, these two waves are exactly equal. And one of the reasons why I use Q charts is because I can click on this line. When I get this wave, when I get this low and this high, and this retracement right here, and I get an isolated low right here where it looks like it might start doing this, what I do is I clone this line, click on this line, I clone it, and I can actually move it here, put it on this low, and see how the market reacts coming up to point D. Okay? Well, I don't remember exactly when it was, but there was what I thought was a perfect ABCD setting up in the Dow. It was last year sometime, and it was on a 60-minute chart. And of course, the higher the time frame the chart, the more significant the move. So I put on my chart buy D. I'm supposed to sell D. Didn't even realize. Buy D, okay, that would be, okay, buy D, okay. So when the market, I actually didn't trade the day that this happened, but the market came up to D and literally just, blew right through it. It was like a 150, 200 point move. So that would be something, it's like, see, I don't look at that as being an accident that I made. That I made that kind of an error on the chart by saying buy D instead of sell D.
That has happened to me, and then I spend the next week trying to quantify it. How did I do that? And I don't know how it happened. So I'm in that trader's hell.
Right.
That you talked about.
Right. We're talking about trading intuitively, and it's really intriguing. But keep something in mind that Sean just said is that one of the things I'm going to suggest to you is that even when we get to the point in the workbook where we talk about, and I didn't notice it at a conscious level until the next day. Go ahead, Jake.
I was just going to say, if you have an unconscious belief that makes you trade incorrectly, how do you separate that? In other words, it's causing you to make a mistake unconsciously, right?
Mhm.
How do you separate that from what you describe as intuition?
I'm not sure. Okay, ask me the question again.
Like, in other words, your intuition made you write, sell, buy D.
Yeah, my intuition told me to buy D.
Right.
Okay.
What if, there's something in your brain, which was a bad belief, it caused a trading error that made you say buy here or whatever.
Well, what about
and
it?
It didn't work.
Okay, what about it?
I just say, how do you separate intuition from unconscious belief? It's not aware of it. That's really the question.
Well, very easy. I shouldn't say very easy. It's just that the criteria is if it was the perfect thing to do, it was intuition. Anything less than that, and it was rationally based. And I'm not saying that you can't make a decision at a rational level that can't be perfect. All I'm saying is that your intuition will always, based on my definition and the way that I look at it, you can look at it and define it any way that you want. All I'm saying is that in my framework, in my context, intuition will always cause me to step into an experience in a way that's in complete harmony with the environment that I'm in that moment, based on what my desire is. Would that be a good definition of it? Do you think, does it make sense?
Basically, it's your goal.
Yeah, it'll cause me to step into an experience in a way that's in perfect harmony with my desire and the environment that I'm in that moment. And the environmental forces I'm operating, let's say, in, would not be intuition. I know this is really kind of hard and abstract stuff, but you guys can listen to the tape over and over again or watch the tape and as a result, start doing your own explorations in terms of how this works in your life and how you might use it. And let me say something else too, that about 5 or 6 years ago, I was invited to speak at the first annual Intuition conference that was in San Diego. And there were, about 200 or 300 people there, and people from all over the world who investigate the nature of intuition. And one of the things that I came out of that conference with was that nobody could agree on a definition of intuition. Not that there was argument. I'm not saying that people were fighting each other. They weren't. I'm just saying that all the different definitions were mind-boggling. Okay. So I'm just giving you one. I'm not saying there aren't more. Do your own investigation and go on your own path and find what works for you. But and I was amazed too at all the different ways that intuition worked in people's lives. I was stunned. So to take a phrase out of anybody read Conversation with God books by Neil Donald Walsh? Mine is not the only way, it's just another way.
Okay. Man. Alright, backtesting for this morning is done. Let's go ahead and review the charts. Okay, I believe we had this set up last week on gold. It's pushing up. It's looking for it to push up to that high. I don't think I went over that this morning. Euro USD, no alerts gone off. DakotaJPayne, I don't have any alerts set yet because nothing's there yet. Nothing's completely validated yet. Let me turn my headphones down. Oops, did not mean to click on that. the two pairs I was gonna look at were dollar yen and euro yen. I know dollar yen like setup's not even close for me right now, so I'm not even gonna look at that. Euro yen's been pushing up, or I've been looking for it to push up, and it has pushed up. And just looking to see how price reacts off this trend line. After the reaction off the trend line, could possibly get a maybe another sell. Nothing 100% just yet. Actually, looking at it now, I actually kind of like that setup. I like that sell setup like right now. Let me go to the higher time frame. Where am I looking for this to get down to? I don't like the break there. I'd like a more aggressive break at this level. Yeah, it would have to be this one. Nope. Doesn't make sense. I need to get up to that level. But honestly, in this situation, I'm like, personally, in my heart, right, in here, I like the break of the trend line and looking for buys again. I like a reversal in this situation. But see how price reacts off of that, and depending on that information, we'll sell or we'll wait. So I'm gonna add that to the list. Here USD's already added. Okay, yeah. Now let's look at US30 and Bitcoin. Bitcoin, really excited about it. I've been talking about it for a while. Break, waiting for a correction, looking for buy on US30. There's nothing to do there. I'm not going to waste time on that. Bitcoin, this is where our buy was. Price pushed up. Price has already tested that level at least one time. I like a better correction here. Yeah, I'd like to see price correct because I'm looking for an overextension. Yeah, I remember exactly. So I'm looking for price to push up a little bit higher, looking for a correction to about to this level, and then look for continuation. That simple. Same thing every single time, and we'll see what happens. Yeah, I believe, was there anything else that was interesting to me this week? GU, yeah, GU's interesting. I'm gonna keep an eye out on that, and then all at JPY. Okay, that's about it. So I appreciate you guys watching. Hope you enjoyed, and I hope like that. Like obviously, like I'm backtesting right now, and obviously like on every live stream, I'm not gonna be doing this. This is just for basically like this month and a half that I'll be doing this, at least on stream. But if you haven't started backtesting, backtest, because the whole purpose of backtesting is to gather data to know, let's say the end result of backtesting. Gather data to know the ups and downs of your system, right? And the different advantages that you can take with it, right? Like, what are the tendencies? What, like, is it better to set your stop loss here? Is it better to set your take profit here? Is it better to wait on an entry after this specific candle formation happens? Those type of things, you can ask yourself those questions, and you have tons of data to back it up, or tons of data to review to back it up and to find those things out. And also it allows you to repeat the same setup over and over again, so it's real quick and easy to execute on when it's time to actually trade it live. And if you struggle with like just backtesting for an hour, like when I first started backtesting, I would do 5 trades a day, like just 5 trades a day. It would take me like an hour to do, because that was the first steps of me actually figuring out the system, or using and practicing the system. So I had to look at the checklist every single time. Now it's really easy for me to just zip through it, but yeah, set like a small goal of 3 or 5 every single day. That includes Saturdays and Sundays, not just the weekdays, but every single day, especially if you're first starting off. The more time you put into this, the sooner you'll advance, or you'll progress, right? If you're focusing on the right things and practicing consistently. Now, right now, I can't, like right now, I know I have a video saying, like my intro video says I'm a consistently profitable trader, which at the time I was consistently profitable, but now I'm like break even because of a flaw that I thought I saw, but it just didn't occur, or I didn't get met with the situation again. So that occurrence happened, and now I'm pretty much a break-even trader. I'm just consolidating at a consistent level, or yeah, at a base level. So have to figure some things out and work on them. And like, I say that because like over the past it's now been 2 years since I've been used this exact system that I'm using. And like, I've noticed like the stages of progress that I've gone through. Like, first figuring out the system, risk management, figuring out my discipline, figuring out routine, things like that, and improving that consistently. And then like, discipline is definitely a major step, because you need discipline in every factor to consistently do the work and to actually be aware of what you're doing, which so I think I'll definitely do a video on that, on the updates for this year. I haven't really given an update for this year. I've just been talking about stuff that's happened, like past stories, to catch, I guess, my channel up. But I'll do that. Hope you guys enjoyed the stream, and I'll catch you tomorrow.